Good day, guys. How are we all doing? How are we all good? So we're finishing off chapter 8, which is the last chapter of this book, Market Structure and Powerful Setups by WadeFX Setups. Shout out to Wade for allowing us to go through this book. I'm going to drop his Telegram link and his other socials at the end of the video. So we're going to be looking at the marked up charts, which is the last chapter of this book. Okay, let's quickly scroll down to chapter 8. Let's see. All right, so I hope you guys are finding this book helpful. Let us know what you're learning or how this book has helped you in the comment section. If you haven't yet subscribed to the channel, please do subscribe, like, and share. All right, so marked up charts, chapter 8, Euro USD. So here the author gave us an example of Euro USD. This is the 1 minute chart. I believe there's multiple charts where the author explains all his setups, but let's start with this one. So the main thing which we've come up with from this book is you always want to trade in the direction of the BMS, in the direction of the break-in market structure. So if your price was coming down and then you get price breaking a structure, getting your BMS, the next thing you want to wait for is either you're going to run your fib from point A to point B, see where your price retraces to, then take your buy from there, or you're going to wait for price to return to an OB and you can buy from there, which could also be equal lows. This could also end up becoming a failed swing right here. So, you know, when your price fails to break the last low, that's an SMS or a failed swing. So soon as we break another structure again, we are looking for buys. So the main thing you're looking for is this retracement here. So as the price is retracing, either it's going to retrace into an OTE, which means you need to run your fib, or price is going to retrace to the last order block, which is the RTO, return to order block, and it's going to buy from here. Or they might use this confluence or this confluence as a support zone where price could also buy from. And the other thing you always want to try and identify is either a liquidity sweep or a stop hunt. So in this example, you can clearly see previous week's taken out to soup. Okay, price takes out the previous week's low. Once we create this low, we get a stop hunt or a liquidity sweep right there. Break-in market structure. Now we are actively looking for buys. This simply means if you had run a fib from point A to point B, this area here is an OTE, so you could have still been able to take a buy. If you had waited for price to return to the order block, price eventually returned to the OB and it tapped. So the other thing maybe I want to highlight is mainly the setups which return to the RTO or to that order block. These are what you call your sniper entries. You should actually attack them with buy limits if you're buying, sell limits if you're selling. So as soon as your price taps into the zone, the trade automatically activates with your stop loss below the zone, as you see the author here actually highlighted. So with the way I personally trade, I usually wait for a proper reaction, and then I take my trades. I'll try to explain when I get into the actual charts. So this is an EU by example. Previous week's low taken out or with a stop hunt, lower time frame setup, stop hunt plus break of market structure plus return to order block. So that's a complete setup there. Another example on Nasdaq, this is the 4 hour time frame. On the 4 hour time frame, what do we have? We have price. I think this is actually a downtrend which was happening. So price left an OB here. We broke structure. Each time we break structure, we always want to look for a trade in the direction of the break. but we need to wait for that retracement. So price retraces, comes near the OB, creates this high here, and then that high is now taken out, buy side liquidity taken out, price also tapping into the OB. So this is a double confluence. You've got a liquidity sweep, buy side liquidity taken out, and you've got that retest or that reaction of the H4 order block, which is an RT or the return to the order block. Then from there, you can now take your sell. So like I said, each time you are using the RTO for an entry, if you're selling, you always want to attack it with the sell limit with your stop loss outside the range. Then maybe you might be wondering, where do you target? So personally for me, I usually go for 1:2 or 1:3 risk to reward. That's a way I use to attack my trades. I also go for 100 points minimum if I'm trading indices like your Nasdaq, Dow Jones, S&P 500, German 40. I usually try to target a minimum of 100 points, or you can target the last highs, sorry, the last lows if you're selling, which you can see. So here we've got a low, here we've got a low, here we've got a low. So these are all areas where you can simply target as you take profit. So higher time frame setup, 4 hour, simple return to order block on the 4 hour, which is a sell setup. Remember, if you're selling, it's also referred to as a short. All right. Nasdaq Confluence, I think this is the same setup, but now viewed on the H1. So remember, you can also use multi-timeframe analysis or top-down analysis to come up with your setups. If you can be able to view these setups on the 4 hour, you can still execute on the 4 hour. There's nothing wrong with that. If you're able to see them on the H1, if you're able to see them on the M30, M15, wherever you are able to see them, because as traders, we are different. We understand price action different. Some time frames might be harder to interpret than others. So whenever you are able to articulate what's going on with price, then you can still be able to execute. So this is the 4 hour zone. Price created this swing or this high here, then it was taken out. Then from there, price simply melted. Then again, what you see now on the H1, you've got a nice break of structure. Soon as you get that BMS right here, you are now anticipating price to retrace, then continue with the sell. So as the price is retracing, all you are looking for is points of interest, which means in this example, since we already had a liquidity sweep here and an entry from a higher time frame, you can still be able to run your fib from point A to point B, then wait for price to retrace into that area, then take your sell. And again, one thing I need to highlight, for my entries, what do I want to see? I always want to see nameable candles. If you've seen some of my videos on YouTube, you hear me speak mainly of the pin bar. You hear me speak of the doji. You hear me speak of the bearish engulfing if we're selling, bullish engulfing if we're buying. You hear me speak of inside bars. So if we run a fib and let's say this is our OTE, right in our OTE, I want to see any of these nameable candles. If I see any of these nameable candles, that's my entry trigger with my stop loss outside the range or outside the pin bar or doji if it's available, right? So let's continue. So this is in H1 T2 sub short plus a 4 hour RTO. So these abbreviations, I believe they are now understandable to you. If not, please reread the book from the first chapter so that you can understand. Right, same setup, I believe, as seen now from the 1 minute time frame. So 4 hour order block. So remember, price can still be triggered here if you had a sell limit from a higher time frame like your H1, H4. At this point, the trade is already active because it's in a 4 hour zone. stop loss outside the range. Price comes up, doesn't take you out. But if you're also using a smaller time frame like the M15, you can still be able to look for a setup within this area. So maybe this might confuse you. You might enter here with a stop loss here, but all I can say is try to put your stop loss outside the range. I've got some alerts going on my trading view. Please ignore those notifications. All right, so M1, personally, I don't use it, but you hear me speak of the M3. M1 for me is a bit like noisy. It might get confusing. So if the smaller time frames are confusing, stick to M15, stick to H1, stick to H4. There's nothing wrong with the higher time frames. The only thing is you will just have to hold your trades a little bit longer. All right, so this was a lower time frame setup. As you can see, stop and break of market structure, return to order block inside the 4-hour OB. So you can see once you get this BMS, I think is the major key which you want to see as a trader so that you can be able to confirm your directional bias. All right, so the next example, GBP, CHF, this is the daily time frame. We got this high here. We got a nice buy side liquidity, which means you can still sell from here and target these previous lows, these previous lows, these previous lows as your targets. That's if you execute on the daily. You can still come on the smaller time frame. You can still be able to find trades within these areas here. Another BMS here, retracement pin bar. Like I said, that's another entry criteria. Then if you are able to understand or to articulate your market structure, then you would have seen this BMS. Once you see a BMS, what are you waiting for? Either a retracement into the OTE or a retracement into the RTO, right? Those are the main things you want to wait for as a trader. So higher time frame setup, stop on BMS, RTO. Right, GBP, CHF continuation. This is M15. So we've got a daily zone here. I think it's the same setup as well. Our daily zone was here. Price took out that buy side liquidity. And we always know if your price is coming up and it gives you this right here and a BMS here, this is a failed swing and it's a sign that your price is going down. BMS is a confirmation that your price is coming down. All you are now waiting for is price to retrace either to the OTE or to the RTO, which is your order block, right? So if you get that retracement sell limit, stop loss outside the range, you are targeting the last lows as your TP. So as you see here, price eventually came to those areas. Right, this is a lower time frame setup, SMS, break on market structure, RTO. Nasdaq 1 minute time frame. Right, another buy side liquidity or a liquidity sweep. Then price from there eventually sold off. So sometimes what will happen is there will be acceleration in the market in such a way that soon as a liquidity sweep is done or soon as the buy side liquidity is taken, price will simply like melt off. Right, this is usually like visible, especially on the 1 minute. Usually it might be hard to wait like for a retracement. It might not come, it might come. All depends with your patience. But personally, for me, like I said, I do not execute on the M1. Right. So price now comes to the bottom side. On the bottom side, okay, this is an example where the author actually executes the trade. You can see this is a perfect return as well from the entry to where the trade currently is. 336 is almost 100 points. Like I said, I also always try to go for a minimum of 100 points if I'm trading indices. That's what I call a successful trade, right? So what did the author see here? The author noticed this low. They noticed a liquidity sweep or a stop hunt, break in market structure. We're now looking for buys. Return to an order block, another break of market structure. We're now looking for buys. Might run a fib here. OTE, nameable candle with another sell side liquidity sweep right here, nameable candle, which is a pin bar, which is what we use for our entries. So here, I think the author actually entered on this RTO, stop loss outside the range, targeting these highs, I believe, and the trade was a success. So not trade during London Open, New York Open, or high impact news events. This is just a clue. You always want to trade when you've got volume in the markets. Why are we trading at London Open? Because that's where we've got volume in the market. That's where the markets are moving. So London Open, New York Open, or high impact news events, that's where you get volume. That's where you enter your trade and you see your price actually expanding and moving towards your target. Another example, USD CAD on the 4-hour time frame, right? Liquidity sweep, you can still enter here as long as you're able to identify what's going on. If it's a liquidity sweep, buy side liquidity stop hunt, you can still take your trade here. If you are doubting this and you want to wait to see a break of market structure, there is literally nothing wrong with that. As long as you are able to be patient, wait for your price to either retrace to your OTE or retrace or return to the RTO. So here with an RTO and OTE confluence, then price melted to the downside. So if you're selling here, what's your target? The last low, last low, last low, and price reached all those TPs. And this is a 4-hour time frame. So this is mainly like for swing traders as well. So here the author can also is also showing us that we can also refine our entries on lower time frames as long as we understand what's going on with the higher time frame. All right, so we don't want to waste much time. Let me see how many other examples are there. So it's simply the same thing. This is EU. This is a low on one day, taken out on the next day. So that's a turtle soup setup. And from there, nameable candle, you are targeting this high. Price simply gets to your TP. So it's like I said, try to go for 1:2, try to go for 1:3, and try to just repeat, repeat, rinse and repeat. And always try to trade. If you're a day trader, try to trade during times when you've got volume in the market. Okay, another example, this is a sell high on this day, which becomes the previous day's high on the next day. So we've got another tattoo. So sell soon as you identify that liquidity sweep, take your trade, aim for the last lows you see as your TPs, and most of the times price will get there. Of which, if you are aiming for a 1:2, by the time price gets here, you're done. 1:3, done. 1:4, 1:5, done. So always try to just aim for a piece of the cake, not the whole move. Especially if you're still struggling to book profits, just go for something you can take and call it a day. So these are just the definitions. Another example, EU M15, price takes out these lows. Nice pin bar here, which is a stop hunt, liquidity sweep, sell side liquidity taken out. Price pushes up aggressively. Good trade. So it's either you take this trade or you wait for a BMS. Usually after a BMS, like I said, price will retrace either into the OTE or into the order block, which becomes an RTO. If both of them appear at the same time, that just means it's a high probability trade. Okay. So let's see if we've got another example. Again, we've got these lows, these lows. Let's see what happens on here. Price pushes up. So to our left, I assume this is a BMS. So once we break, I'm now looking for buys. We do have this order block, which is an RTO, this low and this low stop hunt, which means you can still take your trade here. Another minor BMS here. So we are trading back towards this high basically. So price retraces again into this OB. So we have a BMS here, Once we retrace into the OB, if we tap the OB, enter your trade, buy limits, stop loss, then from there you can see price just went, it shot straight to the TP. So what we're trying to do as traders is we're trying to add trade at times when there is volume. Either you're trading the London Open, New York Open, or high impact news events so that you don't get stuck in this sideways move. Rather enter when you've got volume in the market so that you don't really get like how do I put it? What's the word? What's the word? You don't get bored in a trade whereby you end up maybe closing, then your trade still moves into your direction and you end up getting emotional about it. So let's see if I can be able to now jump into the charts. I think there's like a few more examples. You guys can just go through these examples. It's simply the same thing which the author is explaining in all the setups. So I don't want to make this video too long. You can simply go through all these examples. Then if you've got a question, you can either hit up the author, WadeFX direct, on his Telegram. I'll drop the link in the description, or you can hit me up on my WhatsApp or on my Telegram as well. Then I can always help whenever I can. So remember, I'm only explaining this book based to my own understanding. If you want a better explanation, you can always go direct to the author, WadeFX, and he's going to be able to help you out. So without wasting much time, nice setup here. Without wasting much time, there's a lot of examples, a lot of examples. So I'm just going to go to the actual charts. We're going to start with US 30. So for me, what I'm showing you is the current price action of today. I'm not really going to go too far so that you don't get confused. I'll simply try to use examples on the current day. This is the 23rd of June, 2025. We also have the uncertainty and the volatility in the markets based on the Iran, Israel, USA war, whatever is going on, that conflict in the Middle East. So the markets are pretty much going wild. But all I can say is if you are able to identify what you've learned or what you've read, simply take your trades, put your stop loss, execute. That's all you can do at this point. So starting off with US 30, what did we have today? Okay, maybe before I explain on my charts, you'll notice I highlight my London Open, right? So I usually trade 3 hours of London Open. If my setups appear within my trading time, I will execute. So that's London session. This is New York session. And this is New York PM session. Okay, so most of my setups, I try to look for them within my trading sessions because I'm a day trader. So please do not get confused with these boxes. You see, they are simply my trading times. So I'll just highlight the setup and I'll highlight the timing. All right, so this was today, London. Pretty much nothing based on the book we're going through. There was a bit of a setup in between the sessions. So usually for me, I miss these sessions. I don't these trades. I don't take them. I usually try to trade within my trading time. So coming into the PM session, what did we get? You can see we had a liquidity sweep or a stop hunt or a sell side liquidity. So each time I'm saying liquidity sweep, if it's on the bottom side, just know it's an SSL, sell side liquidity. So from here, you can enter. Usually, like I say, for me, I always like to see nameable candles. So if I get a pin bar doji, that's my entry criteria, and my stop loss is always below that week. So if you were on charts, you could have taken this trade. What are you targeting? The last high. What are you targeting? Quarter points theory. If you understand quarter points, you can also target that. But from here to here, you can see it was already like more than 100 points, which means for me, that's a successful setup. And also looking at this, we had a BMS and this move. So this only confirms what I want to see because already I was looking for buys. Okay, so that's a US 30 example. US 100, I've got a multiple examples marked out. This is the H1. What do we have? All right, so I've got this high, which took out liquidity here, right? So in this example, I do not have a BMS, which is too clear on H1, right? The only BMS I have is right here when this move breaks this structure. So now I'm confidently looking for what? For sells. I have to wait for a retracement either into the OTE, which this most likely would have triggered me to sell with a stop loss here. But if you're a trader, you always want to mark all your points of interest. So if you've got OTE, you want to mark it. If you've got an OB where you feel like there might be an RTO, you always also want to mark it. This way, if you enter here and it takes you out and this remains valid, you can still be able to take another setup and be able to recover your loss. So here now price returned to the RTO, as you can see right there. We also had a liquidity sweep, and this was now during New York. So New York took out London highs, bounced off into a RTO, and price sold. What are we targeting? The last lows, the last lows, the last lows. So with this setup, let me show you from H4. Price is actually sort of in a range, and for those who are in our WhatsApp community, you already know, or if you're following my YouTube, I think I've touched on this on some sessions whereby price was inside the previous week's range. So that was my POI, my points of interest. So if you're selling, you're targeting that level. If you're buying, you're targeting this level. So most likely price will get up here. You get it. So this is just like top-down analysis. You just want to have like a picture of what can most likely happen so that you can use those levels as your targets. So here, after our BMS and our RTO, price simply dropped. After that, now we're waiting for the next best setup. So what you'll notice is from last week again, we took out this low, right? We came back into the range. Then we broke a structure here. We left an order block here, right? Then price pushed up, retraced, pushed up, retraced, and we tapped into the OB the first time or into the RTO. We actually pushed up after that, which means if you had entered at the New York open today, our kills on time, you could still have had a successful trade. Stop loss outside the range, buy limits, TP here, TP here. Even if you had held, for some reason, price would still have come back to the same zone and then pushed now to the ultimate TP, which was the previous day's high. So just a clue on how you attack the previous day's high. If price takes out liquidity here, you want to sell. But if we break and retest, this becomes what we call a zone flip buy or a zone flip setup, which means it's a continuation trade. Those are just some of the things you need to know as a trader. It's not always when the price takes out your previous day's low whereby you get a buy. Sometimes price will then continue going to the downside. But the important thing I'll advise you is mark the previous day's high, mark the previous day's low. Mark the previous session high, mark the previous session low. So you can see these were liquidity sweeps, sell side liquidity on the London lows. And here we initially had a buy side liquidity and price sold before it actually pushed up. So depending with how you are understanding price, you can still take your buy here, take your profits. You can still take your sell here, take your profits. You can still take another buy here, take your profits. But as a trader, you just want to take one good trade per day and call it a day. Just as simple as that. Okay, S&P 500 is the same, more or less the same setup with Nasdaq. So what you see here is we had a liquidity sweep. Price pushed up. We broke a structure inside here, visible on M15. And we had an order block here, and we had that return to order block right in our New York session. As you see, then from there, price did not look back, simply pushed up. So you can target these previous highs as your TPs and your trade will just be as successful just like that. As long as you understand what's going on, it becomes a little bit more easier. So German 40, I did not mark anything. Gold, I did not mark anything. EU, this example, I wanted to show you something that sometimes you might have a pattern and you feel like price is coming down. As you see, this was me last week. These were my points of interest for sales, and I was looking for price to come down here. You can see this was my target area. So sometimes price is not going to do what you think it might do. You want to trade what your price is actually doing and not what you think it might do. So maybe you can just add that into your notes as well. And here you will notice I also had a whole number points, quarter points theory. Price was playing around that area. So if price is here, also sometimes you just want to wait until you get a cleaner setup. Sometimes also you want to check your higher time frame trend because you might get a liquidity sweep like here and you think price is now coming down, whereas price is actually not going to do that. So sometimes you're going to get losses. Sometimes your price is going to play out, which is the reason we use proper risk on every trade. Okay, so as we are about to round up, I think I've got another example. Okay, this is US oil. Right, this was last week Thursday's high. Nice liquidity sweep here. Then price started to drop. We had a BMS here based off this move. Then price retraced into an RTO. Then it dropped from there. So if you feel like you don't understand market structure, try to identify the BMS. Once you can identify a break in market structure, especially after a stop handle, after a liquidity sweep, it becomes a little bit easier to actually trade. The only thing which you need is patience to wait for price to retrace either into the OTE or into the RTO. So here, as you notice, if you notice, most of my setups, they are happening within my trading times. So we had a BMS here, BMS here, price dropped, then they retraced into the order block. Just as my first Q zone was about to end, then price dropped and it continued to drop within the PM session and it continued to drop all the way up until now. So patience, guys, patience, and practice. All those things, they make everything a bit more perfect. So if you notice also, this strategy works across all assets from indices. I didn't mark gold, but there's also setups on gold, currencies, US oil, crypto. So on crypto, you can also see from this low, which was the initial low, we had a liquidity sweep. Then we had a BMS. Price pushed up, we left an order block here, which was only retested today during our New York session. So this setup or this move started prior to our PM session. So if I come to my charts and I see this, obviously I'm going to execute with my stop loss here and I'm going to target the last high, the previous day's high, the moving average, as long as my setups are happening within my sessions. Here you also see in the morning, we took out London highs. So that's a buy side liquidity. We bounced off a higher time frame zone. So that's a turtle soup sell. And we dropped back to this low and back to this order block. So if you can see a sell, take the sell, take your money. If you can see a buy, take your buy, take your money. So I think that's it from me today as we round up this book. Okay, another last example here on CHF, break of market structure. We had an order block here, price pushed, broke structure, retraced, RTO pushed, another BMS. This was last week. Another BMS, then price retraced coming in today. This was Asian session. I don't trade Asian though. So this is just to motivate any Asian session traders. If you're trading Asian session, you always want to look for JPY pairs. So this is CHF JPY, as you can see. So these setups happen across assets, across all session times. You simply have to be there, patient, mark your charts. If you're on TradingView, just set alerts. Then once you hear alert, you can come to your chart and you can execute. So I don't think I've got anything else to add. I was simply explaining based on my own understanding. Like I said, you can still get in touch with the author, WadeFX. Let me just show you his socials so that if you guys want to follow him, special shout out to Wade, gave us this book and we went through it. And if you want to follow him on Twitter or X, WadeFX Setups, if you want to follow him on Instagram at Wade_FX_setups. If you want to follow him on Telegram, this is the link which I'm going to paste also in the description. So let's rate this book, guys. What do you rate this book out of 10? With 10 being the best book and 1 being the worst. What's your rating of this book? For me, 11 out of 10. This is a good book. Shout out to Wade. Best book for someone who's learning how to trade. Best book for someone who's intermediate. Best book for someone who's advanced. You can get your setups. The only thing you want to do is either stick to 1 or 2 pairs, then be patient enough. Always mark your charts on a daily basis, especially the previous day's high, previous day's lows, previous session high, previous session lows. Um, Mark those levels, then see how your price reacts. Then once you can get a BMS, wait for your entry, take your trade. If you can identify a stop hunt, take your trade. If you can identify a liquidity sweep, excuse me, take your trade. Do not hesitate. Practice makes perfect. So don't forget to rate this book out of 10. I've already gave it my rating, 11 out of 10. I don't have anything to take away from this book. Good book. If you don't understand it, reread it again. Even if you do understand it, I would advise you to reread this book again and you'll find out that you might have missed something which might actually help you in your trading journey. So thank you so much, guys, for making time to go through this book from the first chapter all the way until the last. Also, let me know in the comment section which book you would like us to go through next. After all is been said and done, I wish you happy trading year, profitable trading year. We are right in the middle of the year now, so hopefully the next 5 to 6 months are going to be profitable for you if you're not already profitable, or they are going to be consistent for you if you're not yet consistently profitable. Wishing everyone a good trading journey. Enjoy the rest of your day. Good trading.